Hey guys, I'm 𝗧𝗍𝗍 White, a popular investor from eToro, and today I'm going to be explaining why Chinese stocks are so insanely cheap. All Chinese stocks at the minute are insanely cheap. Right now, if you had the money, you could buy the entire Chinese stock market or Nvidia. One reason things are typically cheap for is people don't expect them to grow, but over the last 40 years, China has been one of the world's fastest growing economies. Even adjusted for relative terms, over the last 40 years, China's poverty has gone from 95% of the population being in poverty 40 years ago to just 5%. Under 5% of China's population are now in poverty. That is an insane change over the last 40 years. And even in actual terms of innovation, China are world leaders in battery production, battery electric vehicle production, solar production, wind turbine production, a whole ton of things. China are world leaders in the producer of it. And in 2018, the Chinese stock market was doing so well that it was up 80% from its highs at 2011. Then disaster struck. The pandemic happened. And perhaps it's the Mandela effect, but I really thought the pandemic was when things started to go sour for the Chinese stock market. However, actually 2 years into the pandemic in 2021, the market reached all-time highs yet again and was up 130% from 2011. However, after a couple of years of insane decline in the share prices of Chinese stocks, we are now only 10% up from where we were in 2011. I definitely think China could have managed its economy better, and I don't think that central planning is the way to go. However, I definitely think that China has done a lot of growth since 13 years ago. Or think of it this way, China's GDP in 2011 was 7.5 trillion, and since then it's steadily increased, and today it is at 18 trillion. If this was McDonald's, then they would have tripled their profits and being sold for only 10% more. Understanding what has happened to the Chinese stock market does not require advanced mathematics. What I believe it actually requires is an understanding of how human psychology works. Let me just go get something. This here is the textbook for the Chartered Institute for Securities and Investment. It's a course that I took recently, and it's an international qualification in finance. And in this textbook, it literally talks about human psychological effects on the market. While human beings, if we were being efficient, should always have a healthy balance of optimism and pessimism, what we actually have in practice is we swing from being optimistic to pessimistic. Generally, we don't swing that far from either side, but we're generally either slightly over-optimistic or slightly over-pessimistic. However, when human beings get over-optimistic or over-pessimistic, what that can lead is to significant overvaluation or undervaluation. Oftentimes, what I find most interesting about this is if there is a time in the market where people are over-optimistic, this is the thing that is most likely going to cause people to become overly pessimistic in the future. This is why even in our most optimistic models of the future for companies' finances, we should always apply a little bit of pessimism. Let me grab another book. Here it is. This is Same as Ever by Morgan Housel. And in this book, he describes a typical market cycle. There is a very common life cycle of greed and fear, and it goes like this. First, you assume good news is permanent. Then you become oblivious to bad news. Then you deny bad news. Then you panic at bad news. And then you accept bad news. Then here's the interesting bit though. Then you assume bad news is permanent. Then you become oblivious to good news. You ignore good news. Then you deny good news. And then eventually, after trying to deny the good news, you eventually are forced to accept good news. And then once you've finally accepted it, after denying it for so long, you assume good news is permanent. And we are back to where we began, the same as ever. This is the economic cycle. Now, where is China right now in this economic cycle? I had a hypothesis that China right now are in the point of the economic cycle where people assume bad news is permanent. To test there was little basis behind the idea that bad news is permanent for China, what I did was I went back to the very point at which this economic decline in the Chinese stock market began in 2021, just a little bit before that time. Now, as we know, the Chinese stock market didn't decline until 2 years into the pandemic. And something that I'd forgotten about when I went back to do research was that China at the time, in 2021, the biggest controversy is that Western governments were booting out China's 5G plans. And whether you agree or disagree with this, it's interesting that this journey begins with the Western governments doing something quite authoritarian and Donald Trump signing an executive order to delist Chinese telecom stocks from the New York Stock Exchange. Obviously, this isn't really the beginning. This is part of a bigger trade war between the US and China, but over the course of this decline in Chinese share prices, a lot of people accuse China of being authoritarian and being bad central planning, when this story actually begins with the US government doing something quite authoritarian themselves. The next thing that happens after this, and this is probably one of the biggest reasons for people having a negative feeling towards China, was the President Xi Jinping, sorry, I'm probably butchering that pronunciation, he then decided to crack down on China's biggest tech stocks. And from what we can tell at this point, he is actually legitimately cracking down on them for breaking anti-monopoly rules. However, this did not lead to an immediate decline. What it actually led to was more speculation and fear as to what President Xi Jinping was going to do next. And what is funny was he never did anything after this, really. Obviously, the CCP has done things since then, but nothing on this scale. Now, after this initial hit, this fear and speculation as to what Xi Jinping is going to do to the economy, they get another blow. COVID-19 comes back and they have to issue more lockdowns and stricter lockdowns in China again. And in fact, 2022 is quite an incredible year, because then you also get the heightening of the Russia-Ukraine conflict. And underneath all of this, for years, is this simmering belief that China are going to try and invade Taiwan, a legitimate, genuine fear by the West. And what is interesting about all of these things is that none of them really affect China's equity market directly. The most direct effect to Chinese equity markets is things like lockdown causing consumers to be earning less money and to be spending less money, which is going to affect companies like how much Alibaba make. What it all does, all these stories do, is they create this image in people's mind, this continuing image of do not invest in China. And I think the question got asked so many times after the Russia-Ukraine conflict, is China going to invade Taiwan, that it really became a thing in people's minds that it's something that China are definitely going to do, because they'd heard about it so much. However, I actually believe in what Charlie Munger said after seeing the response from the West as to what Russia, Putin's actions in Ukraine caused the West to do. I think that China became less likely to invade Taiwan after seeing what happened to Russia-Ukraine. And now, 2 years into the war, I don't want to pretend to know too much about this, but it seems that Putin is locked in. He's locked the Russian people into this war. He can't just back down. And he's turned Russia into a sort of second North Korea. Just remember, over the last 40 years, China has experienced much more growth than Russia. China is a fully fledged, almost Western style country in Asia. The people in China are very, very middle class and do not want to be living North Korea style lives, all for the sake of getting some land like Taiwan. However, just because the Chinese people don't want it does not mean that the CCP doesn't want it, and it does not guarantee that they won't invade Taiwan, only that the events of Russia-Ukraine seem to make it less appealing for them to do so. Now we are in 2023, 2024, and we are seeing a return to growth for Chinese companies. And what we're seeing, the reaction from the market, is not similar to what Morgan Housel described in this book. It's textbook. It's exactly how he described it. Now, the return is coming back, and what people are doing right now is ignoring it. What has happened is people have gone in such a short period of time from 2021 thinking China's stock market is going to go up perpetually forever and only good things will happen, to no good thing will happen ever. So yeah, this is why I am buying Chinese stocks right now. This is why I have Alibaba, and I am considering opening a position of the Chinese iShares MSCI, a sort of collection of the biggest Chinese companies, just so that I can have a diversified position as well as a position that is specific to one company. But I am very, very confident that the amount of pessimism that has reached the Chinese market has maxed out. Even though the prices might go a little bit lower in the short term, there's going to become a point where the market as a whole can no longer ignore the growth potential of the Chinese economy. But the thing that you need to do now is